Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is Tuesday, and it looks like we've snapped back a little bit on. We've snapped back a little bit after Monday's sell-off. Man, it was it was a big sell-off. I was stopped out of a lot of positions, and you know it's looking a little bit better today. But we're still in a confirm. We're still in an uptrend under pressure. So it's really time to be really careful on the market. I've been lightening up, but I did do a very interesting spread trade today, and I thought I would show it to you. It's basically available just by going to if you're on just by going to Dallas Trading Floor, www.Dallas Trading Floor. I'll show you where you can press to get the link. And But I want to show it to you first and kind of how these decks work, and it's kind of an interesting thing to do. And I kind of want to show you, how we update, the decks every day, and and show you where to close and that kind of thing. So that was a question from one of the discard members. So I wanted to kind of walk you through. This is kind of an interesting one. It's a bull calendar spread, and interestingly enough, it looks as if Tesla has reversed a little bit and it may be moving higher. And I kind of want to kind of give you an idea of why I think this is going to happen. And this is a way to take advantage of. But without further ado, let me just run through these, and then I'm going to run through my other slides. But let's run through this trade first. I just did this. I just got it up on on the site so you can see it. But let me go ahead and show you kind of. This is a trade that I did, and this is on Tesla. So I'm going to go ahead and get sort of a bounce. And I have a line on here. It's a dotted line, and this is the 780 line. So we have started to kind of reverse, and hopefully it's going to move higher. And I do believe it's going to move up towards about that 780 level. I don't know if you can see this on the screen. So let me see if I can zoom it in a little bit. Okay, let me see if I can. Let me see if I can close that. And I don't know if you can see this, but what I'm going to do is after this, I'm going to show you the link that you need to press in order to get this. Now, if you're watching on TikTok, this link is available. All you have to do is go to my profile, and then you'll see it. It's sign up for free action trade alerts, and then right below that, it's showing you this trade. But I'm showing this trade currently on YouTube at youtube.com/Dallas Trading Floor. So here's kind of the idea of what's going on with the trade. Basically, Tesla is improving. Its relative strength is improving, and I'm hoping it's starting to hold above the 50-day moving average. And basically, I think we're setting up for another run at about 780. So basically, if Tesla rises up to 780, we're going to run it up till about 780 and then close before we get there. But that's kind of the idea here. So basically, it has a high rating, and basically, when I did this today, this cost me a total of $9.03 per contract. I only did one contract here. And remember, a contract is 100 shares, so that comes out to be not $903. But basically, what we're trying to do is get to the price target of about of about 780. So let me kind of show you this. What I did today is I bought one 780. This is a calendar spread, so the expiration dates are different. I bought a 22nd October 780 call, and that costs 1741 for a total of 17441. And then I simultaneously sold a call closer in, a 780 call for October 8th. Okay, and I got $8.38 of that for 830.38. So total out of my pocket 903. So basically, this is basically the entry. Basically, it costs $903 per contract to do this. This is the maximum risk, but we have a better than 50%, a better than 100% return potential if it reaches 780. So potentially this could return up to 1359. The maximum return, of course, is about 150%. So that's pretty darn good. And I just kind of want to show you the profit map here. Basically, this profit map looks like this. So let's go out there and look to see where let's go out and look to see where where Tesla ended up today. So I'm going to go to MarketSmith, and what I'm going to do is I'm going to pull up MarketSmith. There we go. Okay, let's do that. All right, and this is a pay. This is a pay site, but I really like it. So this is Tesla today. It closed, and what I'm gonna do is I'm just gonna clip this out of there. But the closing price 739 for Tesla. So what I'm gonna do is I'm gonna go back over here to basically to the spread, and I'm going to kind of show you kind of how that works. So I'm going to replace this with the amount where Tesla closed, where Tesla closed today, and that basically was at 739.38. So basically that's where it closed. So what we do each day is we update the list. So this is the expected value of this trade. So basically, right now, today, the value of this trade is basically $1. So we're basically even. We just entered the trade, not too much different. Now, if this is if we go if we get a movement upwards, you can see it gets better and better in terms of the expected value. Now, if it goes the other way, we need to close the trade early. Here's something that I have. This is only in the deck, so you can only do this if you sign up for the deck. But basically, what I've done is I put in a link, and you can go right to the expected the trade for it. This is what's cool about this. Let's say, for instance, it goes down. It's not going up and it's going down. And I need to close that trade. What I do is I just go over to where it is where it is, and I click on that, and that's going to tell me how to close the trade and when I'll either win or lose on that trade. But let's say it goes up instead, I can click that, you see, and I can close that early for a profit, see? And as it gets closer to that 780, you can see there, and it goes up even more. But basically what's going on here is that um, in the deck, I basically close out everything each day, and I put where the expected value is going to be, as you can see, and then if you have access to the deck, then you have the link so you can close the trade and see your winners or your losers. Now with this one, this is just a slide. You can't click through on this one, but if you go to the link, it's going to let you it's going to give you the information on how to close that trade. This is very, very helpful, because let's say, for instance, it's you were out here 30 days, and we're right up here. The value of the trade, we've come all the way up to 780, but we come up 780 early, so the expected value, the expected profit on this would be $367. By clicking that, it's going to give me exactly how to close out that trade by selling and then buying, as you can see. And because of my prior trade, you can see that would then be a profit of 367. Now, I know I went through that very, very quickly, but I want to kind of show you just really quickly kind of how you can get access to that trade. You just go to www.Dallas Trading Floor. All right. .com. And what's going to happen here, well, hopefully I can get it up there. There we go. I think this will work. Okay. So it's Dallas, DALLAS, Trading, TRADING, FLOOR.com. And what that'll bring you to is it'll bring you to a site that kind of looks like this. In order to get access to all of this information, all you have to do is go right here where it says bullish calendar spread on Tesla. And then when you click that, it's going to ask you for your name, address, and email, so I can keep track of who has it. And then click, and then that will move you through to the deck. The advantage of having the deck, of course, is that you have the link that will show you how to close that trade. But I just kind of wanted to show that to you. And by the way, if you're looking on TikTok and you want to see this, very easy to do. It's actually built into TikTok. Just go to my profile, click on the link. It says Beacons, and then it's going to be the second one down. It says bullish calendar spread on Tesla if you want to take a look at it. But this is kind of a great trade. I'm going to be in this trade, and then of course I'll notify you when I move in or out of the trade there. But that's kind of that's kind of the that's kind of the trade for on Tesla. And I do expect that hopefully we're going to see some nice action on Tesla. And this is really anticipating that we might get Tesla to move up to basically the 780 level. And 780 level, this will return about 150%. So it's a pretty nice trade, even though the market trend is under pressure. So without further ado, let me get to the slides and kind of go through kind of the market before we get to the questions. But what I'd like to do is I'd like to show you sort of what's going on in terms of some of the questions there. So let's see if I can. Yeah, there we go. So basically, we've reversed a little bit off of Monday's sell-off. I mean, it was it was pretty brutal yesterday. We did violate some index lines on the S&P 500, the QQQ, not the QQQ, the Nasdaq and the Dow. Just kind of want to show you kind of where we're at now today. Well, we bounced off of the Dow. The Dow's up. It's just up slightly, about 1/3%, but that's sort of a dead cat bounce. So don't think that is a new trend. We're still kind of in this uptrend under pressure, but we still are in an uptrend, but we're much weaker than we were before. So the Dow has moved up just slightly, 107.50, or about 0.32%. Now with the S&P, we're up much stronger on the S&P, up 0.43%, so about 0.5%. The Nasdaq is doing the best of them all, and of course it fell probably the hardest, so it's up about 0.75%, but it's still holding above the 1450 level, which is so key. There seems to be some resistance on the Nasdaq right at about 15,000. So we want to kind of look at that. Hopefully we can continue that uptrend, and hopefully we can move. Hopefully, it's just one bounce, but we got to be careful. I've reduced most of my positions to where I'm about 75% in cash, and I think that right now, being that we're in a market, we're in an uptrend under pressure, it's prudent to be, you don't want to be on the margin at all. You probably want to be about 50% in cash, waiting for some opportunities. Because if it does reverse and pull lower, then we'll have other opportunities. But right now, we want to kind of be lightly invested, and that's part of the reason I did the spread trade, because it's very efficient in terms of the use of my capital. So I can get whereas if I were to invest in if I were to go into a position in Tesla, even at the 170 level, that's basically $17,000. Whereas with this trade, the trade that I just showed you, you can go into that and get almost the same effect, not quite, almost the same effect for about a little bit less than $1,000, and you have the potential to double, a 150% return potentially in about a month. So hopefully, if Tesla starts moving towards that 170 level, the Russell here, that's another index, of course. That's a much broader index. That's the 2,000 largest. That's the 2,000 largest stocks in the exchange, and that was up just slightly, but it's up more than it's up about 0.7%. So comparable to the Nasdaq. Now, the interesting about the Russell is there's a lot of regional banks in this one. So about 1/3 of the Russell are banks. The IBD 50. This is a proprietary index that Investor Business Daily uses. It's basically growth stocks, but it was up even stronger, about 1.85%. Now, here's the thing with growth stocks. If you're in growth stocks, they're going to be much more. They're going to react much more strongly to the market. If the market goes up, I mean, they're going to be magnified. They're very what they call high beta stocks, typically, are growth stocks. So that's just something to keep in mind. This is taking about 316 today, so just right before the show here. But we still are in a uptrend under pressure, so be very careful. We've had 5 distribution days on the S&P and 4 on the Nasdaq. So that's really interesting. Brooks Automation is going to spin off their chip business. They're going to stay in life sciences. That's part of the reason that Brooks is up so much. I don't know much about Taskus, what that one is, but a lot of stuff are down in volume. Doximity, Apple, ASML, just a lot of them are Crocs, Devon. I actually, what happened to me, I had a position in Devon, and it got stopped out. So I got stopped out of Devon today. That's one of the stocks that I got stopped out of, unfortunately. It's been very volatile, and I've tightened up my stop losses. Typically right now I have 5% stop losses, 5% down from where I bought them. You know, is where I have my stop loss, because again, we could, it's a volatile market. We could get a lot of, we could get a strong movement down. So I'm protecting. I've gone through all my positions, and I've set up the stop losses. And I may get stopped out of some of the positions, but it's better than being in a situation like with Star Bulk Carriers, which happened yesterday, where it did fall much harder. Fortunately, I had a stop loss on it because I wasn't watching the stock when it dropped. I had a stop loss on it. I was stopped out. And now unfortunately it's changed direction. So that's why I highly recommend stop losses when the market condition is changing, like it's moving from a confirmed uptrend like we had on Friday to an uptrend under pressure Monday and today. That's when I set my stop losses even tighter, just so that if there is a big movement, I don't get, I preserve my capital. This is the Spider. This at one time was the world's largest ETF. You can see yesterday we fell very strongly below, and this red line here is the 40-day moving average. So this is a very key line. As you can see, what it had been happen is it would go up, bounce, test, up, down, test. But on Friday it tested, but boy, it didn't hold, and you can see it move down. We've moved up a little bit since then, but basically we are still basically at this level. We've dropped significantly on the Spider. So the market is sort of weakening. Hopefully we'll continue to get the uptrend, but as you can see, there's been some damage. So that's why we want to be a little bit lighter we want to have a little bit lighter footprint. Now, the QQQ, this is where most of the tech stocks live. This one has bounced back much stronger than the S&P 500, which is represented by the Spider ETF, SPY. The QQQ is the top 100 stocks in the Nasdaq. So this is, Microsoft and Facebook, those kind of stocks. This has bounced back stronger, but if you'll notice, it bounced back, and I don't know if you can see this. You have to kind of squint a little bit, but you'll see that it settled right about at the midpoint of the last. So the damage is still done. There's still damage on the QQQ. So just because it's up today doesn't necessarily mean it's recovered the 40-day line. In order for it to kind of coast to clear, we're going to have 4 days and then hopefully a close above this line, really, to get back to a market trend under pressure. I mean, to a market trend in a confirmed uptrend. We're not in a confirmed uptrend now. We're in a market trend under pressure. And of course, there's 3 states, and I sent this out on the email. And by the way, if you want to get on that free action trade alerts list, this is great when we have market changes like this. Super easy. Just go to www.Dallas Trading Floor, first and last name and email address, so they can send these out when we have these market changes. This is really where they're of most importance, is when we have a market direction, a market change. We definitely had one on Monday. So just want to show you the stock of the day, and that is AutoNation. It's holding up fairly well. We always want to see, after we have these drawdowns like we had on Monday, we want to see which stocks are going to hold out the best. And in this case, AutoNation, for some reason, is doing quite well. The volume is down a little bit, but we're very, very close to a 125.31 cup buy point. So you could probably start easing into the stock if you so choose. It's got a composite rating of 99, which is the best. And the industry group is a little bit bad, but it's in 123 out of 197. I like to buy a little bit higher up than this, but this is, if you wanted to get a little, if you have under 50, if you have a little bit of capital that you want to start putting in the market. But now be very careful. I wouldn't go in with a full position on this one. Maybe a half position would work the best. Remember, this is AutoNation, and it's looking very, very good. 125.31 cup based buy point. So this is not necessarily recommendations. This is just a stock that is set up very nicely and it has a high relative strength. So it's a possible to put on your watch list. It's something to take a look at. It's not a recommendation to buy it. I don't own it, but it's in a very good. It's a very good stock. I've had Lithia, which is in the same group before, and done well with that. Here's what I have currently in my portfolios, and I have a number of portfolios, and it's a little confusing. But this is what I this is these are the stocks that I actually have and I own. I don't these aren't the option plays that I have, but these are the stock plays that I have. I have Macy's. It's up a little bit today. It's amazing because, who would have thought a department store? I have Palantir. I'm hanging in there. I don't know. This one is sort of on the bubble. It could pull back, but for right now, it's doing okay. Robert Half, I've got that. I've had it for a while. It's down just slightly. Top build doing fairly well. The XLE, the Energy Select Spider, is up, and I have this one now. Interestingly enough, I have Devon. I was stopped out of Devon, but I wasn't stopped out of the XLE. I'm barely hanging on Goldman Sachs. I suspect that this one probably will come off tomorrow, but I don't know. And again, I'm still in Perkin Elmer, so that kind of gives you kind of where I'm at in terms of the portfolios that I'm working with right now. So, that's definitely something that that you can take a look at. Let's see. Okay, so let's go. Just wanted to get over to the questions here, and I think there we go. Okay, so we're good to go on the questions. So hopefully we can. No, well, let's get the right screen there. That would help. Okay, let's go to that, and I'm just moving over to that screen now. Great. Okay. So thanks everybody for waiting, being so patient. Let's take the first question and kind of look. We all, we all, we got run. Why that doesn't? If it, is this Sun Run? I think that's the one. Yeah, Sun Run. Yeah. I just don't. I don't think you want this one. I mean, I know that, this might have been a good stock in the past, but I don't think you want to buy this. It's got a relative strength. That's why I showed you Auto Nation, because it's just a much stronger stock. This one has a relative strength of 9. Yeah, and it's got a downward trend. And let's look at the checklist. No, the checklist is bad. So here's the thing on this one. I know that you might have had it in the past, but I think that I think basically, this is don't buy this one. Don't buy this one. So maybe there's something out there that I don't know. Obviously, I mean, a lot of stuff I don't know, but just don't buy this one. I don't think that Run is really that good a stock. I'll be honest with you. So I mean, hopefully I'm wrong, but I wouldn't buy that one. I wouldn't buy that. Okay, so let's look at Apple. Apple's been weak. As I said, as well, and that's AAPL. Of course, there is resistance on Apple at about 150. It's moved back down to sort of a support level that I have in here, and basically at this line, I'm gonna reset that alert. But yeah, 137. Yeah, 137.07. That's the buy point on Apple. So it's still, it's just continuously having problems. It's coming up, to about 150. It ran up and now it's run down. It may have bounced at this level. I'm going to kind of see if I can see what exactly, if that line is basically at 142. So it seems like it's moving between about 142 and about 152, kind of from this range. Right now, probably don't want to add to a position here. It's a great stock long term. I mean, it's been a super winner, forever. But let's look at the weekly chart. As you can see, we seem to be getting, getting some resistance here. So, is this a good time to get into Apple? Well, I think I want to. I think what you want to do, there is possibly an opportunity if it pulls back to the 200-day line and it reverses, but right now it's in a downward trend. And even though it's a great stock, I would be a little bit careful buying it at this level, just because it's not, the charts are not looking as good as as I would like to see them. So that's kind of the deal. Okay, I'm gonna stop taking some of those because these are all pretty much meme stocks, and that's fine. I mean, but I don't know if you want to buy Plug Power. That was sort of the stock for last year, and maybe it'll be good. I don't know. Um, okay, so short Amazon. I don't know if I would short Amazon right here because they had excellent earnings. There's certain stocks that shorting in an upward trending market is very difficult. I mean, it definitely can be done, and but it um, it's easier to short if the market in general is moving lower. And right now, I think that basically Amazon, it isn't moving lower; it's really just moving sideways. So I would be careful. I would be careful shorting here. Now, I did do a bear call spread on 3M, and that turned out very well. That actually ended up working out very, very well. But I don't think I would short this one because it looks like we have a bounce at the 200-day line for Amazon. So I would be very, very careful with Amazon right now because basically until it moves below about 31.75, I just don't think that it's prudent. It doesn't have a head and shoulders pattern as far as I can see. So I would be careful, very careful about shorting Amazon. It's just a very, very strong stock. And I think if you want to do that, I think you're better off using shorting on the doing bear spreads on the Chinese stocks. Let's look at BABA for that because I haven't put together. Yeah, this is probably a better bet for a short for a bear trade, a bear options trade, because this has a relative strength of 5. This was formerly a high flyer. Typically, your best shorts are stocks that were formerly very, very high flyers. That's definitely the case with BABA, and of course it's underneath the thing about BABA is that it's underneath the 200-day line, the 40-day line, the 21-day line, the 10-day line. So the trend on BABA is down. It's a Chinese stock. It was a high flyer, and this one might be. And again, I'm not totally. What's going to happen is I think we're going to get a rally up to the 21-day line. See what I think has happened. You see, what's happening is that this is rolling up. At first, it rallied above the 21-day. That's the green line here. Then it came down. Then it rallied to the 21-day line. Then it came down, and then it below the 21-day line, and now it can't even hold on to the 21-day line. This is getting ready to rally, and then I believe this would be a good short if it got to this level right here. That is a potential good short because it's going to rally up to the 21-day line, and then when it does, I think we're going to get a downward motion. So instead of shorting Amazon, which is potentially a much stronger stock, why not short Alibaba? Because and I wouldn't short Alibaba. What I would do is I would do a bear like a bear call spread on it. That's what I do. But it's a good question. I just think that one might be better. All right, so we're trying to get a short squeeze, and again, short squeezes are tough to play because I mean, they were good, but a lot of they've changed some of the rules, so short squeezes are going to be more difficult um, coming up. The thing about stocks like this, this might be potentially a good short trade. It's definitely in the right trend. This is definitely in the right trend, and it's got a very low relative strength of 4. But it's a very cheap stock. See, the problem, you don't want to short a stock that's too cheap because it really doesn't have any place to go. You want a stock that's been expensive that's getting cheaper. So I wouldn't choose this one as a short candidate. I just wouldn't. It's not expensive enough. That's the reason I'm looking at um, um, some of the Chinese stocks. Let's look at I think JDC, J.com. No, I don't. Let me see what JD is. I think it's just JD. Yeah, JD.com. JD.com, this is another Chinese stock that may have really good potential in shorting. This was a fairly expensive stock. I mean, back in February, this was selling for 108. It's currently at 84. What's happened is it's starting to get it's this is starting to form the head. Oops, there's the head, and then this is the left shoulder, and then the right shoulder is always lower. And what happens is that it will go up to an index line and then collapse, and that's what's happening. It's rallied up to the 50-day to the 200-day line, and it's collapsing. And I think that we're going to get another rally attempt, and then if we do, I think we're going to see it go like that. So my guess is here's a potential. This one is a potential. Um, this is a potential short, and I think this is probably an easier. This is a little bit easier than trying to figure out whether a short squeeze. I think with some of these Chinese stocks, especially JD.com and Baba, I think there's some good opportunities for shorting in here because they were high initially, and I think they're probably going to go lower. This one has a relative strength of 22. That's that's probably a little bit on the high side, but I'm liking that. It's very low relative strength. The checklist is still relatively good, but the key here is that what's going to happen, I believe, is you're going to see a lot of these funds that were formerly in these stocks trying to exit them. So I'm going to take a look and kind of see how many funds have been in this. There's 45% is invested in our funds. These still do have positive cash flow, but if you'll notice, the number of funds are starting to drop. It went from 1738 here to 1618. Now, that's not necessarily going to mean that the next quarter it's going to be worse, but you can start to see, even though their sales are going up, they're starting to turn the corner to starting to lose money. So this one might be a potential for a short squeeze. Again, this one has the left shoulder, the head, there we go, the head, and then this is sort of the right shoulder. And what happens is eventually what happens is then it starts trying to regain the index lines, the 200-day line, and it can't do it, and then it probably needs to come up to the 200-day line one or two more times, and then on that second try, when it collapses, that's where it's going to fall. So it's not ready yet, but it's getting close. You probably want to watch this for a potential short on this one. This is so. This is a watch list for a potential short. So as the market weakens, that may be something and that's going to be JD. Okay, great. And I'm going to put that short. All right. So that's going to go onto my short list, and hopefully, we can do something. We can do something with that because it does look like it is weakening, and we might be able to get some good stuff on this. All right. Good question. What happened to the market? Well, markets don't continue to go up all the time. What's happening is that we're possibly at the beginning of a correction, and typically we need if you're relatively new to the stock market, you probably last year was not a very good indication of the way it normally works. Typically, when we're in an uptrend, we get to these situations that require 10 to 20% downtrends in the market. So, this is a periodic thing. I'm not saying I like it, but I think we're overdue for that. Let's kind of look at the S&P 500 over a period of time, and I kind of want to show you this chart and just kind of show you what I'm talking about here. What happens is that even we've pretty much been in an uptrend on the S&P 500, but every now and again you'll get these pull downs, and they're typically between 10 and 20%. That's one of them there. This was the COVID one right here. So we're probably due. We're probably due for another one. As you can see, we're starting to move, and the chart I'm looking at here is the weekly chart. So ever so often we get these pullbacks, and it's really hard to say. It's violated it's violated the 10-week line, and now it's getting to the this is the 20-week line, 25-week line, excuse me. It's the 25-week line because we're on the weekly chart. So if it goes down to that and it violates that, and it might, it hasn't done that in a while. You see, it hasn't violated the 25-day, the 25-week line since June of 2020. So it's been a while. So we've had quite a while. Before that, the next time that it violated the 25-week moving average was way back here, basically starting in September of '08. So that was about 3 years ago, as you can see. So we're sort of overdue for at least a test of that. So I think that if we do see this down, we're likely to get a 10 to 20% pullback. Now we could get more than that. Again, this was the COVID thing. We're probably not going to get anything like this because the economy is reopening, but we probably are going to get a pullback. So if we get a pullback, we want to be ready when this starts to happen. This is a very good time. Last time when we had the COVID meltdown, I closed all my positions basically about right there, and then I started shorting the indexes, and then we had this what they call follow through day, which basically happened in March. It was the third week of March, and boy, when this fall through day came in, I got right back in, I bought, and boy, that was a really nice uptrend. But we're getting ready for another test. So um, that's kind of what happens. The market doesn't either go up or down straight in a straight way. So we're probably going to get a test of that. All right. Thanks for this is also a very insightful one. This is the ETF GLD for that tracks the price of bullion. And this, interesting enough, you would think that, with all this inflation, you know, fears, you would think that we would have, just a roaring market in gold, but that has not been the case. Interestingly enough, now we did get a rally, but the price of gold is below, and the gold. This is the ETF. This is the GLD ETF that tracks the price of gold bullion. If you'll notice, it's below the 200-day line. See, I'm on the daily chart here, so this is the 200-day line. We're below that. Why would you say is that? Because, and this is the thing with we're happening in the economy. Everybody says that, oh, there's going to be trends of inflation. Yes, there is, but it's going to be in the commodities that we use every day. Things like oil, things like rent, things like food. And the flip side of that, we're going to have deflation in certain asset values. I think that we're going to have deflation in certain of the stock values and also in some of the real estate values in this country. Now, I know that sounds very strange because real estate is selling, especially residential real estate, is selling for an all-time high. But I don't think that is going to continue because I think there's going to be, once a lot of these moratoriums are lifted, there's going to be a lot of foreclosures, and so there's going to be a downtrend in the real estate market. Also, we have a tremendous affordability problem in much of our real estate market. So I expect that we're going to have, in certain areas, we're going to have deflation. That's why they call this stagflation. So in stagflation, believe it or not, gold is not a very good investment. Now, interestingly enough, there is a good investment in a stagflation environment, and that is oil. So I'm invested in the XLE, and this tracks expiration of gold. Now, of oil. Oil has done fairly well. It's not, it's still not. I mean, it's still below the 200-day line, and hopefully it's reversing. But it's got a much better uptrend than gold, at least up until now. We'll see what happens. But if the problem with inflation is, if we have unlimited demand, demand's not the problem. The supply is not the problem. The problem is demand. Right now, a lot of people are not working. They're not using their cars. So the demand for oil is being moderated somewhat by the fact that people are using the computer and they're not going to jobs. Now, so even though we have inflation in prices and consumer level, we have some interesting problems with asset prices, and I think that gold is really not, unfortunately, a very good hedge. I don't. Unfortunately, it's proven that it's been proven somewhat that that Bitcoin is also having a problem in that area. Bitcoin is really a speculation device. And you ask Jim, well, what what is a good hedge in a period of inflation? What is a good hedge? Well, the best hedge, believe it or not, in a sort of a deflationary situation that we have now, and this is going to be very strange. When he's saying this, you're going to scratch your head and say, "No, I don't believe you." But one of the best hedges right now is cash. That's one of the reasons I've moved to cash, because cash, believe it or not, is actually appreciating. U.S. dollars are actually appreciating right now in the market. Now, why is that the case? Well, the reason is because there's many people, bonds and everything that are paid, that are denominated in dollars, that have to be paid back in dollars. So many countries outside the United States don't have a reliable way to get dollars. The most reliable way to get dollars, of course, is with the price of oil. So until the price of oil goes up, oddly enough, we're probably going to see the dollar strengthen. So it's very weird. There's a lot of different moving parts, and I don't claim to be an economist or know all the ins and outs. But one thing I do know is that gold is less of a good inflation hedge than it used to be. So I'd be very careful buying it, and it's just one of those things. Let's look at Fang. This is an oil driller. Of course, this is Diamondback Energy, FANG. Of course, it's not the Fang stocks. It's a oil company called Fang. So let's look at that for Jeet. Thank you very much. It looks as if we got a nice bounce off the 200-day moving average. It's looking good. It's above the 40-day. So it looks as if the trend is moving up. Now it's not a powerful trend. It reversed when it went below the 200-day line, and it looks like it's on the mend. One thing I'm liking kind of here is that we're having a lot of volume come into this, a lot of buying volume coming into this. Now, this was on Thursday of last week. We had a lot of buying volume coming in and starting to make this move. So let's look at the checklist on this one. The question is, would I buy it now? Well, it's actually looking pretty good. I don't know. I think that you could probably start nibbling on this one. The group is still really good. The U.S. exploration E&P is 37 out of 197. So, again, this is going to be tough to trade, but I think that this is a potentially, I think this is better than the metals, and I think this one's worthy of consideration, because I do think it's a good stock. We had this cup with handle in an 87 buy point, so we're below that at 80. So I think this is when you could possibly start looking at. So I like the way this is looking up. I'm going to look at the weekly chart to look at some of the fundamentals, and you know, they're the sales are really moving up. Last quarter, the sales were up 296%, and more importantly, the profits were up 1,000%. So that's tremendous. We also have a very strong cash flow. What I do think is, when we have this kind of stagflation, there's going to be a movement into the market, into these very highly paying areas. And one of the areas are these E&P companies that have positive cash flow. I mean, this is a very strong cash flow, $11.29 per year on a $50 stock. That is a very strong return. That's a very strong return. So this is, the return on equity is a very solid 4%, and it's probably going to go higher as the price of oil goes up. So that's sort of a fundamental analysis. On a technical analysis, it does look like, this is gathering strength. Now, can you buy it at this level? Well, I think you possibly can. So I really like Fang. That's a very good suggestion, by the way. I'm going to write that down on my little sheet here, FANG, and of course that's Diamondback, and not not the Fang stocks. All right, let's look at Cleveland Cliffs, CLF. This is of course a CLF. Cleveland Cliffs is a steel manufacturer. Now this one had some serious damage was done on today. As you can see, it couldn't hang on to It just couldn't hang on to um, it just couldn't hang on to the 10-week the 10-week line, and unfortunately it dropped all the way down to the 50 to the 25-week line there. So I think you got to be careful until we if this reverses and it bounces off that, then you're okay. But this is a violation, as you can see. You see it didn't it was orderly, but then it went and it gapped down. So I just think that you got to be really careful on this one. I would not, even though these just had tremendous sales increases, tremendous sales and profits. I think you got to be super careful on this one, at least for right now, because it does look like it's losing some strength. 67 checklist, not as good as Fang. So I think out of these two, and I think they're both potentially very good. I think you got to look at Fang as being the one that's the better of the two. So let's take a look at, okay. Somebody is interested in on TikTok is looking in on Uber. Let's look at Uber. Uber. See if that'll come up here. Let's see if I can get Uber. Uber, there we go. Looks like Uber may have bounced, so that would be a good thing. Looking at the weekly chart here, again, this is a fairly new stock, but it's moving right along. It did make a high up here at 60. I don't know. I'm a little bit concerned because it's trading below that 200-day line. I just typically don't like to buy stocks below the 200-day line, but it is starting to show some strength. The relative strength on this is 22, which is not bad, and it's pointing up. There's definitely been some buying here, and the earnings were very good. So could we buy this one? You know what? I just don't think it's time for this one. It's kind of like a wine. You kind of got you got to age it a little bit here. So what I think on this one is that this is a watch list for now. I wouldn't buy this one. So that's kind of my take on it. So watch this Uber for now. And I know this is kind of boring. When you're watch listing all these stocks, it would be better if there was more action. Um, but I think that you've got to I think you got to watch this one. This is really I wouldn't buy this one in the current with the current pattern. I just wouldn't. I just don't think it's strong enough yet. So, but it is potentially it is a very good company, but I just don't think it's time to buy it right now. So I would be careful with this one. That could be careful with this one as well. Let's look at Zoom, and of course this became a mega cap ZM, and but unfortunately what's happened is like so many stocks like this, the expectations just uh, have exceeded what they were able to do, even though they've just done a tremendous they've just done tremendous stuff in terms of in terms of their sales. Their sales are up 54%, which is incredible, really. Profits up 48%. But here's the thing, believe it or not, and boy, I tell you, the the stock market's very greedy. They're expecting more out of this. Unfortunately, right now with Uber, we just have a downward trend. We're below that 200-day line. It's time, it's time to wait on this one. Let it form a base, and then possibly look at it. But right now Uber needs to form a base. That's really kind of what that's really kind of what needs to happen. Is oops, that's the that's the wrong one. Uber, and I spelled it wrong. Uber needs to form a base. So that's the thing. You got to wait on this one. It's just really nothing you can do. Zoom needs to form a base. So I wouldn't be going with that one right now. All right. So your prods on. Okay, I'm taking a look at. Oh, Interesting. I have a question from TikTok. Thank you very much. From on Lucid. Let's see. Look at Lucid. I don't know which stock symbol that's trading under. L. Uh, let's see. LC Lucid. Oh, let's see what stocks is that's trading under. LC. Yeah, Lucid Group. LCID. Okay, great. I hadn't called that up. Stock up. That one is. It's volatile. That I will give it. Let's see if I can zoom in a little bit on it. Let's see if I can zoom in. Oops, that's the wrong one. Okay, so now we've got some magnification on it. Just kind of want to show you the action on this one. And this is essentially in a consolidation, from about 2980 on up here to on up here. So right now it's still within this consolidation range. Would I buy it at this level? Well, I would probably wait until it moves past the buy point, the buy point here. I you know I this for me the jury's still out on on this stock because I really want to see it move. This is a relatively new issue. I really want to see it move above the pivot of about 2981. Really, so right now we're at 26. So here's what I would do on this one. I would probably draw a trend line. Oops, see if I can draw a trend line here. So I think you might be able to start, and you could potentially nibble on this one. This one is a little bit weak on the checklist, so I would probably not. I would probably in this kind of a market because we're in a confirm when we're in a market, we're in an uptrend under pressure. I don't think I would buy this one right now. I might consider watch listing it, but right now, I probably would pass on this one. It's just because the market is, it's a little bit tougher in this market to trade it. It's just we don't have as strong a confirmed uptrend right now. So I'd like to see the market. Like to see the market firm a little bit before we do anything. Let's look at Workhorse. That's kind of also in the automotive group. Yeah, this was a great group last year. I actually my number one stock last year was Tesla, like a lot of other people, and I was able to do very well on it. But this year, it's not that the automotive group, is not as powerful as it was. And I kind of want to show you the chart on Workhorse so that you can kind of get an idea of why I'm saying that. The trend, unfortunately, is down on this one tremendously. And so Workhorse, WKHS, it's got an RS rating of 1. This is the worst. It doesn't get any worse than this, unfortunately. We definitely had some sales that went up, and we did have the potential. We had some sales that went up, but we're still in a negative position. There's a lot of competition in this area. They lost under protest, they lost a major contract to Oshkosh for some military vehicles. The checklist is 56. So I would really on this one. If I wasn't in it, I probably wouldn't be getting in it. I would have to pass on this one. I just would have to pass on it just because I don't think it's potentially as good, as a good stock. Now, I've been giving you all this negative stuff, so let's look at the stock of the day, and that's AutoNation. And this one is potentially worth your time looking at because it is in an upward trend. It's very strong, and it is doing quite well, and so there is a buy point on this one at 125.21. It's currently at 121. This is more the kind of stock I think if you're going to be interested in something related to the automotive group, this is something that you might want to be into more because this is going to be stronger. We had some nice sales that moved up, but the profits, and this is the key because there's a shortage because of supply chain issues, Many of the automobile dealerships are having very good profits now. They can't keep trucks on the lot. There's a shortage of chips. So AutoNation, so interestingly enough, the car dealers are the ones that are benefiting the most from this and not the manufacturers because they can't make enough units, but the car dealers can control the prices that they can sell their used cars at. The margins on used cars are up tremendously, and I think they're likely to remain high for a while. It's kind of like the real estate business. We don't build enough new homes in this country, so therefore all the homes go up because there's less to buy. So that's the kind of the case with cars. We can't build a lot of the new cars, so the price of used cars is going up, but that doesn't benefit the it doesn't just so much benefit the manufacturers, it benefits the dealers, and that's why AutoNation might be a potentially good fit if you're looking for a place. Again, remember we're not in a confirmed uptrend, so you want to be careful. I wouldn't go in with this any more than about a half a position, but this is as a 100% checklist. This is the kind of stocks that you want to be looking at. Are stocks that are very very strong, and this is strong. The earnings per share is above 80%, so this is the top 20. The relative strength is above 80, top 20. It's being acquired by the funds. We have we have the earnings per share were up last quarter. The sales were up over 20%. The current price is above $10 because funds don't like to buy stocks that are less than $10, and the percent off the all-time high is less than 15%. So this is just checking all the boxes. If you're interested in a stock that has some potential, this might be the one. I'm not recommending this. I don't own this stock, but this group is very, very strong. You notice how when we looked at Workhorse, the relative strength was about a 1. This is a 95. So this is a much better stock, at least for right now, because it just depends. When you ask what's the best stock, Jim, well, it depends, and it depends on what part of the cycle we're in. Right now, the automobile dealers are doing particularly well, so that's something that you might want to look at there. All right, I think probably let's see if we have the last few questions, and then okay, we did Uber. Okay, let's look at Upstart. Yeah, because that's an interesting one as well. And of course, what Upstart does, for those who don't know, is that they do what they do is they use social media and analytics to basically create credit scores for people. So instead of leaving it up to the you know the credit bureaus and a loan officer, what they can do is they can automate that process and see if they're going to do a loan based on things that are out there on social media. So be very careful of what you put on social media because believe me, there are people watching to see. And this is one of the companies, Upstart, and this is a very very strong company. I wish that I had gotten in at the first stage cup because this is looking very very good. There was a pivot at 199. Right now it's at 319. So unfortunately with this one, and I wish I could buy this one. This is what they call extended, and as you can see it's quite far above the buy point. So I can't buy this one. I like this one a lot, but I unfortunately can't buy it right now because it's extended. So that's the issue here. So it's kind of like this is so frustrating. This is extended. Uh, so wait for base to buy. And I think that's just kind of what you kind of do. I mean, you got to be very. This is a much more a less. This is a much more demanding market. We got to be much more picky. Upstart is a great company, but we're just too far extended above the natural buy point. So here's the thing. I think you just got to wait for a base to buy on this one. So yeah, that's kind of a bummer because it is a great stock. Okay, I think it's the last question here. Let's see. Thoughts. Okay, let's look at this last one. Thoughts on EPRT. Let's look at that. EPRT. Right, and this is essential property. This is a REIT. Some of the REITs have been doing very well. There's a lot of people that are looking for yield, and the REITs are definitely where it is. it's been bouncing up the 40-day line very, very nicely, testing there, testing there, testing there, testing there, and testing there. But it's in a downward trend. So let's see if we can get a reversal on this. I wouldn't buy this currently where it's at. I mean, I'm saying I would buy this. I wouldn't buy this. It sounds like I'm a broken record. I kind of am. I would just be a little bit careful in this kind of market. We just want to buy. We want to try to buy the better merchandise in this market because it's just so unforgiving. But we've got nice increases in sales. We've got nice increases in profits. We have a lot of funds in that. That's all very good thing. And we have strong cash flow based on the price. It's a $28 stock, and the cash flow is $1. That's a pretty strong return for a REIT. It's 3%. So, so I like this one, but I'm just not in the mood to buy it. The REITs are doing well. There's one REIT I want to check in on though it's a perpetual favorite of mine. It's called ELF, Equity Lifestyle, and basically this is the one unfortunately it's extended right now, but I want to turn you on to this one. It's now what is this? This is a Sam Zell REIT. He's one of the largest property investors in the world, based in Chicago. And these companies hold trailer parks. Believe it or not, trailer parks are the most profitable real estate class right now, better than self storage. So this is one you might want to look at. I wouldn't buy it right now because it's essentially extended. But there is, if you go back here, there is a buy point at 74. It's currently at 82. But this one might be a potential, a potential to do this one. So this is ELS and Equity Lifestyle. So we have come to the end of the time together. I'll be back tomorrow, of course, at the same time. But until then, if you want to get on the action trailer, it's very, very easy to do. And of course, we put out an action trade alert. When we did that market change, when it moved to the market trend under, when we went from a confirmed uptrend to market trend under pressure. And that's easy to do. Just go to www.Dallas Trading Floor. And if you're watching on TikTok, super easy. Just go to my profile, click the link, and you'll see a place where you put in first and last name, and then that's how we do it. This is free, the trade alerts. So until tomorrow, thanks everybody for for taking a look today. Tell your friends. We always need people. I'm always looking, of course, like everybody else. I'm looking for people that will like the show and subscribe if you're on YouTube. Really appreciate that. And of course, if you're on TikTok, I'll also like it if you like me as well. So I will be back tomorrow at 3:30 after the market closes, and and then with to answer your questions. So till tomorrow, happy trading.